I'm Deepesh Patel, editor at Trade Finance Global. Today we're at the ITFA and BCR Trade and Investment Forum here in London, and I'm joined by André Casterman, chair of the Fintech Committee at ITFA and managing director of Casterman Advisory, and we have Shobhit Singh, head of Trade Finance Concentrates at Trafigura. Welcome to Trade Finance Talk TV.
Thank you, Deepesh.
Thank you so much, Deepesh.
So today, talk of the day has been digital trade and accelerating the adoption of trade documents to grow opportunities when it comes to trading cross-border. André, I think you're probably in a very good position to give us a bit of an overview. So first of all, let's start with the why. Why is the adoption of digital trade documents so important, and what has been happening in and around the adoption of what we would call the model law on electronic transferable records, or MILITA for short?
Yes, digital trade is very important to scale the business and to improve practices, reducing costs, accelerating processing, and the real objective of all the work we've done for half a decade, 5 years, through the Fintech Committee is really to align policy developments with technology developments. Because a lot of technologies have been around to digitize trade, but they haven't scaled. So here our focus is really to work with policymakers around the world, supporting local banking communities to change laws. And in 2017, the UN released the model law for electronic transferable records. Singapore took advantage of it as a very early adopter, together with Abu Dhabi, and we have worked with the UK, the Law Commission here, and ICC United Kingdom to release the ETDA Act. That was achieved last September. Now, in parallel, we have worked also with Germany, with France. I'm particularly personally involved in the French developments through Paris Europlace, and this is 95% done at this stage. So we're going to see more and more bank involvement in digitizing trade flows in support of their corporate customers, in support of their SMEs as well, and in support of alternative lenders entering that space. So across origination and distribution, we see most developments talking around the alignment of policy and technology for digital negotiable instruments on the origination side, and for tokenization and securitization on the distribution side. So very encouraging developments, and of course our focus from the fintech side at ITFA is to deliver early adopters, to demonstrate that these digital trade innovations are achievable for some, with a willingness to be the first, and if they are achievable for some, they are achievable for others, of course.
Milestones, I would say, for digital trade. Shobhit, what's the benefit as a corporate, in your trade finance role at Trafigura? Why is the digitalization of trade documents so important and exciting, if at all?
I mean, indeed, it's very exciting, Deepesh, because if you know, the trade finance industry and in general, like the commodity industry itself is very document intensive, right? You would imagine, right, billions of trade documents are flowing across the business on a day-to-day basis, which is a massive problem, right? You have issues with the documents or the bills of lading, for that matter, being lost. They have the cases where you have duplication of documents. Sometimes you have fraud cases, which is evident. We have seen very recently in the markets as well. It's a very important topic from our perspective, like from corporates like Trafigura or someone else in the market. Like, everyone would be very interested to look at digitalization of these trades. And for us, if you talk about the benefits, the obvious ones are looking at working capital cycle of those transactions. I can easily tell you, for transactions where you talk about 45, 60 days of working capital requirements, it can easily go down to 30 days or even below that, right? So that's one of the benefits you will have there. You will have, of course, on the transaction cost, of course, when you cut down the working capital cycle, you will have reduction on the transaction cost itself, because the financing cost will go down. But also you will have reductions on the cost related to financing products on trade side, like letters of credit, you would have a reduction on the confirmation cost, because you will have a lesser time required on those letters of credit as well. And the very important fact that I would want to mention is, for corporates, especially in the commodities industry, we will have the chance to let's say at least reduce the usage of letters of indemnities, which can be either in the payment side of letters of indemnity, or it can be on the discharge side of the letters of indemnities as well. And it is very important, because the people who are associated with the commodities industry, they know the contingent risk that lies with these letter of indemnities. So I think there are various factors that we have to look at, but the benefits are quite obvious. And we need to just move ahead with the push to continue with these trade digitalizations and get more and more transactions done with the enhanced penetration in the market, getting, for corporates like us, working with our suppliers, our receivers, making them understand why this is important, and getting them on board with the idea of doing these trades on a digital format, and of course with the banks as well.
Thank you very much, Shobhit. And banks, I think, question for you, André, when it comes to banks and financial institutions, what are some of the greatest challenges when it comes to trade digitalization, and also the adoption of some of these laws like the Electronic Trade Documents Act?
Yeah, for banks, it has, over the last decade, it has mainly been around this missing alignment of rules and technology. So the technology is to digitize bills of lading, or even documents, electronically signed documents. All of those technologies are available, but the legal environment was not there to support it. Now we have the ETDA Act. We're going to get the French law very soon, so there will be multiple options in Europe, in the UK, in the Middle East as well, in Asia, to benefit from a legal system that recognizes electronic transferable records. But there is still, for banks, this resistance to change. Are my corporate customers really expecting this? What are the new risks involved in moving to digital options? Which digital options are acceptable? And we debated today the issue around reliable systems, which is actually not such a big issue at the end of the day. But so there is resistance to change, an effort to recognize that actually we're going to be over time better off in the digital environment, mitigating more operational risks than we are today in the paper environment. And we discussed a lot today the need for more transparency. And that's the key message, not only for regulators but also for banks. There is new value that can be added on top of digital records, such as continuous transparency and visibility of the asset you are basically funding as a bank, or as a credit insurer, or even as an asset manager in the distribution space. That's what this enhanced transparency should support risk mitigation and give greater comfort to the lenders that what they are financing still exists. We can't do that on paper in the same way. Some regulators have gone even further out, like in Singapore, and have used leveraged digitization to fight double spending, double financing fraud. So we could go on and on in terms of the additional benefits we could leverage, but at this stage our focus is to reassure the market that we're on the right track, elevating the early adopters, could be banks, could be corporates, could be alternative lenders, and demonstrating that this is achievable, and this over time will be required as the minimum standard by certainly by the large corporates who want to digitize more of their trade environment.
Thanks, André. I think you make a really interesting, important point that was talked about today, which is paper inherently has risk associated with it. So actually, if we start from that level, when we talk about the digitalization of various paper documents, letters of credit, prom notes, electronic bills of lading, etc., we talk about a lot of advantageous benefits of them versus their paper counterparts. Shobhit, I guess with Trafigura being multi-banked, you can use several different platforms. You probably do use several different platforms from a commodity trading perspective, from a digital documents perspective, and even from a lending and trade finance perspective. I guess the idea of the ETDA coming into fruition brings even more challenges when it comes to more technology and the need for more interoperability for that technology to actually work together. How do you actually come about turning some of the challenges around technological interoperability into opportunity to actually save on costs and drive efficiency?
I think it's a very important point that you raised, Deepesh. Yes, it is true. As of today, as Trafigura, we work with more than 150 banks in the relationship pool, and it's extremely important for us to, at the end, remain technology agnostic. I think that's a very important point. And the way we are driving our digital needs, like which is in the form of whether it is doing EBLs or whether it is doing any other form of digitalization, it needs to not depend just on one platform, right? So even if we work on a platform today, if tomorrow there's a need for us to shift and do transactions on another platform, you should be able to do that, right? So the way we protect our business is by doing this. Right now, the challenges that we see today are, of course, on the interoperability. I think it's a very important point that we need to debate on, generally speaking. I will give you an example, right? I mean, like a couple of decades back, when we all had these telecom operators and mobile industry coming into the picture, you had the issue where you can just call from one operator to their own own phones, right? And you cannot communicate with any other operator, which was a very difficult point. And soon they realized, right, if they don't work on the intercommunication on interoperable networks, you will end up in a situation where you would not be able to penetrate much in the market, right? And I mean, it's just drawing parallels, but for example, on the digital negotiable instruments or on the electronic bills of lading, when you talk about EBL providers, in whatever technology that you work on, whether you talk about just contractual framework or with now the public law framework, or for example blockchain tokenization, all of that, you need to be able to create a market which is not driven by technology or not driven by system. It needs to be driven by the fact that we are trading, or let's say we are working on certain form of assets, and that needs to be able to transform from one section to another section without being bogged down by the technology it requires. And for that, at the end of the day, we require all the EBLs provider to work together to come to a common consensus of having an interoperable framework. And with that, I think the penetration that you have today, probably I think less than 5%, would easily go up to 50% or more, right? I mean, it's just a matter of time that you will have this increase, and that's where I think people need to work on. I think if we don't work on this and we continue pushing on getting more EBL providers or getting more technology, maybe it will be an effort on the opposite side. And despite having some game changer effects like ETDA Act and some other work in progress, as André mentioned on the French side, and also Germany is also working, it might not give you the proper result.
Thank you very much, Shobhit. I guess, André, a difficult question for you, because I know you're very good at answering questions. I guess it's all lovely, rosy. However, a lot of these technology vendors and platforms have a business model. They operate as profitable companies or profit-driven companies. How do we encourage providers, technology platforms, etc., to be technology agnostic, to ensure that they are interoperable with other providers, which obviously adds benefits to the wider community, whilst also maintaining or understanding that they're going to have a dominant market position, continue to grow their sales and ultimately profitability as surviving businesses? Because we have seen some notable failures within the trade finance technology platforms in recent years.
Yeah, it's all about specialization of each provider. Specialization of each provider, recognizing that as a platform, as a technology vendor, because they are not all technology platforms, but they are all technology vendors, they can't support the whole chain of the trade transactions. They each play a role in a particular segment of the transaction, and that they need to focus on scaling the market. Shobhit explained it with the telecom, the operators, and the GSM standard, which allows the telecom providers to interoperate and scale the market, because we can all call each other with different mobiles and different networks, and that's what the technology allows us to do today. The digital assets, that technologies are available today, so that a digital negotiable instruments, a DNI, can navigate from one party to the other, from one platform to the other. We really need, and that's what we're doing through the ITFA DNI initiative, to focus on scaling the market, interoperating, and of course, all of those vendors have their business model, but the business model should not focus on locking in the client, because you want, as a corporate, to be technology agnostic, as you said. You want to move from one platform to the other when the time is right, and you want to interoperate with hundreds of banks and future lenders through various channels. So it's not about forcing everyone into one platform, which is, as I often say, a 20th century mindset. Come onto my platform and I will solve all your issues. In the 21st century, we can interoperate. We have Web3 technologies, tokenization technologies, and we can make sure that the one party in the chain is not forcing the second party in the chain to onboard the technology chosen by the first one. So that's this interoperability is definitely what some players will demonstrate, and we're doing it today through the DNI initiative with the initial bill of lading and prom note and bills of exchange transactions. And some players will resist it because they want to try to force everyone into their platform and charge them. But I think it's all a matter of making sure that the mentalities evolve and the corporates know exactly what they can expect from the market, the technology vendors and the lenders, the banks. So we're getting there. We have proof points that it can be achieved, and we hope that those who are still trying to lock in their communities are basically going to be forced to open up to interoperable practices.
Thank you very much. Shobhit, do you have any real examples? So it's been 8 months since the enactment of the Electronic Trade Documents Act of how Trafigura are utilising digital negotiable instruments, digital trade documents, etc., to help increase efficiency, reduce cost, and decrease the speed time of a transaction?
Yeah, of course. So Deepesh, we have been working with all of these, electronic bills of lading for the last approximately 1.5 years, 2 years, and we have done several transactions on the EBL platform providers, and it has resulted into decent efficiency, I would say, in terms of the transaction cost, in terms of the timeline and working capital, as I mentioned. A very simple example that I will explain to you is, for example, on my business, on the concentrates desk, we ship cargoes from Latin America, especially, for example, Peru, and we ship them to China, because you know on the concentrates domain, a lot of business supply is on the western side, with Latin America, also Africa, and some other regions, and the flow of the business moves towards the east, like especially China, because the smelting positions are there in China. So when we do these transactions, we ship the cargoes from Peru to China. We have been able to demonstrate with our suppliers as well as our receivers that we can do those transactions end-to-end basis electronic bills of lading, basis export LCs that are covered by EUCP and allowing EBLs to be presented, and doing the full mechanism or the presentation, so we call it, under the platform, and it resulted from a timeline of, let's say, that transaction usually takes 45 days. We were able to complete that in 20 days by getting the EBLs issued in a matter of couple of days, versus it takes like 7 days, 8 days to get those BLs issued if you do it on a paper basis. And then when you look at electronic bills to be presented under letters of credit, you can easily transfer those documents through the platform in a matter of seconds, right? You can get those transactions done, and you can move it from yourself to your, let's say, banking partner, which can be a confirming bank, and it can move to the issuing bank on the same day or the next day. And which cycle that takes, it's usually 15 to 21 days, roughly speaking. It can be converted to a 5-7 day cycle. So you can easily imagine the amount of a reduction that we have in terms of the timeline, in terms of the cost benefits, and we just need to keep on expanding into different domains, into different transactions, different supply chains. On the ETD Act itself, I think there are few factors that we have been working with one of the EBL platform provider. One very important aspect after the commencement of the ETD Act was to have the support of the IG club to get the support on the local law bill of lading. So this has been provided, and we just need to have the service agreement with the EBL provider. So as you work on any of the digital services as of today, you can just use that network, that platform, with just signing to their digital services, right? So this is what we have done with that EBL provider. And after that, the standard operating procedure of doing electronic bill of lading under a contractual framework is similar to doing electronic bill of lading under a public or statutory law framework. So effectively, it's the same. It's just like making life easier for the counterparties, banks, suppliers, receivers to work on the platform, and going to the concept of interoperability at the end of the day, because this for me is an interim phase. When you work on the statutory framework, you kind of get away from the fact that you have to be bogged down by a contractual framework which can be 20-30 pages, which not everyone wants to sign. But you come into an interim phase. We just need to sign a digital agreement, which I believe you will have to sign at the end of the day, right? Because if you want to use a digital technology, you need to be able to work on the service, right? Rest everything gets covered by the statutory law, the framework. And the next step after this is, of course, getting 2, 3, 4 platforms working together to transfer those bills of lading from one platform to another platform. But I expect for the next 5 to 10 years, this situation of having the contractual framework as well as having the statutory framework would come handy, would work side by side, with eventually paving way to just having the statutory framework.
Well, there you have it, a real EBL transaction, a case study, and you can see the time reduction from 8 days to hopefully under 2 days. That was Shobhit Singh from Trafigura and André Casterman from Casterman Advisory and ITFA talking to us on Trade Finance Talks TV at the ITFA and BCR Second Trade and Investment Forum. Thank you very much for joining.
Thank you, Deepesh.
Thank you so much.